Hi, and welcome to the Stockscores Market Minutes for September 10th, 2012. This week's topic, the return of alpha. A reminder to subscribe to this YouTube channel so that you can watch these videos each week, and also to subscribe to my free weekly newsletter at stockscores.com/newsletters.asp. All right, let's talk about the return of alpha. Alpha is the portion of a stock's price movement that can be attributed to its own story or fundamentals. It's the reason a stock trades outside of what the overall market index is doing. Now, alpha has been constrained in recent years because there's been so much global financial risk and global political risk. The market has been focused on things like what's happening in Europe, what are the condition of the global banking system, and that sort of thing. In addition, we've had the growing popularity of exchange-traded funds, which originally was meant to mirror a basket of stocks, but now what happens is the stocks that are in that basket tend to mirror the ETF itself, and that has taken away much of alpha. The market has also become more efficient because information is easily accessible. It is no longer the case that a fund manager or someone working on Wall Street necessarily gets better information than someone working from a home office. And all of those things have taken away alpha. They've made the market more heavily correlated. Stocks tend to move with the index and less on the own story of the stock. There is, however, a growing change. It's relatively slow right now, but slowly we are starting to see less macroeconomic and global political factors having an effect in the market. The market isn't as concerned today about what is happening with debt or with politics or that sort of thing as it was a year ago. Now, the market's still quite concerned about that, and so we shouldn't ignore those things, but we're slowly starting to put the big economic crisis behind us and get focused on stocks again. Now, if you want to find alpha, you will have an easier time of doing it in small cap stocks because they tend not to be represented in exchange traded funds, and so they don't tend to trade with those ETFs. They're also not as well covered by analysts, and this means that the information flow from the company to the investor is less efficient. There's an opportunity to uncover hidden value in the smaller cap stocks. Now, knowledge is key, but unfortunately, it's very difficult and expensive to get good knowledge. Fortunately, the market knows all. If you can learn to read the market and understand its message, you can uncover stocks trading on new and important fundamental information that will allow that stock to trade better or stronger than the market. You can use the market itself to uncover alpha. Let's talk about the market now. The S&P 500 has had a pretty good run, and this week, rather than show the 1-year daily chart, which is what I usually show, I've opted to show 5-year weekly charts to get a big picture view of what the market is doing. Now here you can see the S&P 500 has rallied quite nicely over the last few months, and we are now hitting resistance at the top of that upward trend line that I've drawn in red. And my expectation then is that the S&P 500 may soon stall. Now, it hasn't shown any signs of breaking down. That green upward trend line is still intact, and so we should not turn bearish yet. But I do think a little bit of caution is warranted here because the market is hitting some resistance on that 5-year weekly chart. Now, the TSX is a much different looking market because it has not enjoyed the kind of strength that the S&P 500 has enjoyed, and it is actually just now breaking a downward trend line. It did that last week, and it looks to me like this market is going to rally 15% or more in the next year, and therefore I think that the Canadian market looks more favorable than the US market right now. There is, however, within the US market, areas where there is good potential. The small cap sector, as represented by the Russell 2000, has really underperformed the bigger indexes in the US, particularly the NASDAQ, Dow, and S&P 500. And we can see that in the last week, it broke out from a pennant pattern, and that implies that this market is going to start to move higher. So in keeping with my theme of alpha is returning, I think we're going to see the small cap stocks start to outperform, as well as the commodity-based stocks that make up the Canadian market. Now, the 20-year Treasury bond fund is still in an upward trend. It has retraced back to that trend line, and it is building a falling top. And that tells me that it is likely that money is going to continue to come out of the treasuries as it has for the past couple of months. However, we have not yet broken that green upward trend line, and so we should not yet think that money is fleeing the safety of treasuries and is ready to come back to the market. The turnaround in the market is going to take some time. The US dollar is or has been in an upward trend, but it broke that upward trend last week. And really the market here is telling us that it expects that the US Federal Reserve is going to print some money in some sort of quantitative easing or stimulative program, and that has hurt the rise in the US dollar. Now, I think this is good if you are a commodity investor, and again, this sort of scenario favors the Canadian market. Gold, as a result, has rallied because lower US dollar helps gold to go higher. People move money into gold for many reasons, one being as a hedge against inflation, one against the devaluation of currencies, but also money is simply buying gold because it's cheaper to buy gold globally. If the US dollar is going down and you are buying gold in euros, well, then gold just got cheaper. Now, the oil chart is a little bit difficult to read when you look at the 5-year time frame because it is stuck in that long-term range, but it has risen quite nicely over the past few months and is now at some short-term resistance at its downward trend line. We'll have to see if it can break that first downward trend line that I've drawn in red and whether it can rise up to the top of this pattern. I consider oil to be neutral right now. It has had a pretty good run and seems to be stalling in the short term. So I'm neutral on US stocks, but I want to give a caveat on that. I am really neutral on the larger cap US stocks, but I do think there is an opportunity for the small caps to play catch up as alpha returns. Canadian stocks, I am optimistic. Assuming that there is some sort of stimulus from the US Fed, we should expect to see money come back into the materials sector as the global economy starts to improve, but also as the US dollar falls in value. Gold remains an optimistic chart. I'm not one of these people that thinks that gold is going to necessarily rocket to new highs, but I do think there is a tradable rally here that traders should take advantage of. Neutral on oil simply because it's hitting that downward trend line. If we can break that, then things will get better. The market is expecting stimulus from the US Fed. If it comes, expect a rotation out of the recently strong sectors and into the laggards like materials and financials, and I should add the small caps. Look for the Canadian market and the smaller cap stocks to outperform. Well, that has been the Stockscores Market Minutes for September 10th, 2012. Have a great week in the market and trade well.